Hi, this is Randy Finney with Right Side of the Chart, and today is Monday, November 8th, 2021. It is almost 10 o'clock Eastern Time as I'm starting the video. I wanted to see trading get underway before I started this. Here's what I'm going to do. I'm going to break down, and I may, when I have quite a few charts to cover, as I do today, a lot of trade ideas, actionable trade ideas, long trade ideas, shorts, commodities, precious metals, individual stocks, more individual stocks than I've covered in a while. So what I'm going to do is a separate video or just screenshots today, get charts out to you of the markets. But let me just start there and just say nothing's changed. We still need to break this primary trend line on the 60-minute chart, and I'm still on lookout for a what I call a wedge overshoot, which is this impulsive move up out of the wedge, followed by a nearly equally or more impulsive move back down below. And most importantly, right now we have no sell signal. It's a potential scenario, one that hasn't happened yet, but I have a price alert set for this trend line. Again, that's the primary trend line on the 60-minute chart, not the daily. 60-minute chart from mid-October right there in the NASDAQ one. There are lots of reactions on there, and so if and when that happens, that would trigger a sell signal, and there's your targets laid out for you. So we'll do an update later. Here's what I'm going to cover in the following order. If I can't get to all of these, the ones towards the end, I'll push to a second video or get screenshots out to individual charts. But it's again kind of a mishmash of updates on existing trade ideas as well as some new trade ideas in here. I'm going to cover the 5-year Treasury note, Pinterest, P-I-N-S, Copper via the ETFs and futures. I want to cover a couple of the FANG stocks at least, including Netflix and Tesla. And they're definitely worth watching now. A quick update on gold, silver, and the euro. I want to loop back and do another update on Y10. That's Yield 10 Biosciences. That was a trade idea we had last week. Quickly hit T1 the same day, and then the same day it reversed and hit the suggested stop. However, it's still worth monitoring, and I'll get to that. Time permitting, there's a couple other of the stocks in the ag input sector I'll cover as well with it, including SMG, AVD, Rkda. If not, when I did a video a week or so ago, I covered those in that video, and I'll, again, time permitting, do an update there. Crude oil, somebody asked about Alibaba, BABA. So again, time permitting, this is towards the end of the video. If I can get it in, I'll hit Alibaba and maybe the Chinese ETFs like FXI and PGJ, because they're going to move mostly in sync with BABA. And then again, this one I might not be able to get in. Somebody asked for an update on the coal stocks. I did do a video on those a few weeks back, and I will, time permitting, get to those. And if not, I'll cover them in another update. Okay, dokie, let's dive in here. 10 years, ZF. Okay, last week, Friday, I told you it hit that 122, 144 target where the odds for a reaction were likely. And that's our reaction. We had a small divergent high. We had a pullback. So that allowed an active trader to book profits there and do one of two things. You can cycle back in. I'm going to show you where I think we might be going here. There's some minor support there too. I'm going to add a level here. I haven't changed that, modified this chart since last week, but here it is. So there's minor support here about 122.066. A little bit of divergence there, but bigger picture, we're coming off this larger divergent low right here. We're stair-stepping higher. I still think, let me just be very clear, I think we're going to work our way up here to 123.071 over time. It's just a matter of, are we going to pull back a little more before then or not? Whether or not we do this, I'm leaning no. I'll tell you why. I still suspect we're going to get that wedge overshoot this week. And we'll probably know, hopefully by the end of today. It'd be great. That's where I think we really ideally should know. Anywho, if we do, then that typically will cause a flight to safety. Institutions will start selling stocks, sell programs will hit, and then they should start running into a flight to safety into treasuries. And what that's going to do, it's going to push this up. They buy treasuries, it makes the price of the bonds go up and the yields go down. So I'll get to that in a second. So this is a likely scenario, I believe, for the 5-year. So again, if you trade futures, you were able to sidestep, close your long there, and I think you can recycle back in here, down to, but not below 122. At that point, you might consider a stop, especially if you got back in here. And let me show you the 5-year yield. Okay, here's the yield. Remember, we were just looking at the price of the 5-year bond, or at least via their futures. And this is the 5-year yield. To me, big level up there, about 12.97. We'll call it $13 if you want to round off, or 13. It's really 1.3% or 1.297% on the 5-year. And we came close enough. Remember, we reversed just a hair shy. We had a big divergence. And so to me, it's more of a matter of, there are no guarantees, but I think possible if the market doesn't break down this week, we get another thrust up and it holds up, you might see more profit taken on the 5-year off that level that I highlighted on Friday. And then what that means is we'd fall further, the 5-year, and we'd have maybe one more thrust up here soon to make a complete tag of that resistance level. Again, we reversed a hair shy, but again, we came close enough that may have effectively been enough to satisfy a run up to that resistance level, and undoubtedly a reaction so far. And then, so here's that trend line here. So to me, and this aligns with my analysis on the market. If the NASDAQ 100 breaks down, you'll continue to see the 5-year bond yield drop, which means prices will go up on the futures that I just covered for you. If we bounce here, that means yields up and bond prices are going to go down. That scenario would most likely happen again if the stock market holds up and continues to rally and doesn't break down. So this is my preferred scenario at this point in time. Yields down and the 5-year bond up to that next those targets I just gave you on the 60-minute chart. Okay, next up, Pinterest. I believe I shared this one last week. Yeah, I did last week. Looked good. It had, it was in the news recently. I think it was PayPal looking to consider taking it over, buying it out. And that ran the price up right up to that $63 resistance, big level too. And then the deals, they pulled out. Stock dropped to below where it was. So from just a pure valuations perspective, nothing changed. It went up, and rumors that it might be taken out. Then it fell, then it's dipped down below there. Now from a technical perspective, it put in a divergent low right there, and still needs to curl up and make a bullish crossover to confirm that divergence. But one of the better looking long trade ideas. Now, with that being said, if we get the sell signal in QQQ with a solid break below that 60-minute trend line, the wedge overshoot and all that, it would certainly provide a headwind. It wouldn't guarantee that this trade cannot rally. There's no guarantees to that, especially the fact this is not a top holding in the NASDAQ 100, so it can move against the index. It's not as subject to as much forced selling. But with that being said, I'm just sharing trade idea. And if you're long or want to take it long, a stop below the recent lows, absolutely keep it real tight. Stop somewhat below the recent lows, let it ride up here. Targets, have to move that line a little bit. I'm not crazy about. There's a big old gap. Let's just leave that line right there. Look for a backfill of that big gap when the deal fell apart, and that would be a minimum target. And from where we're at today, that would be a rally of about 10%, so not bad. And again, believer in the stock market, I think we're going a lot higher. Then you just buy it here at the big divergent low and hold on and let it run. If it can ultimately go and break out that downtrend line off the highs right here, that would be quite bullish for Pinterest. Next up, copper, Cper. You can look at the ETFs. This is what it looks like here. We put in a divergent high, and I mentioned that back then, being bearish on copper, we had a divergent high and the primary uptrend line, which was broken here, and there was our negative divergence, right? Broke down, we went and back tested, and we've been stair-stepping lower since, but then we put in recently positive divergence on the divergent low. We went on to break out the downtrend line off the highs and impulsively, and we come in and we're back testing now. I'm going to show you a case on the 60-minute chart. So this is a long trade idea for you now based on the back test there of the trend line. JJC is another, that's not it. JJC is another copper ETN, just a different company. There it is. There was your divergent high, breakdown, blah, 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 blah. I don't know why I don't have it marked here. It should, but either way, same thing as Cper. They're just two different fund company ETNs that track copper. There you go. There's your divergent low right there. There, positive divergence moving up, and same thing. You downtrend line off the highs. Again, they're just two different companies, so charts are going to mirror each other. Breakdown, back test of the downtrend line, and last but not least, let me grab the futures. And those are symbol HG. HG, we're looking at the December contract right here. There's your positive divergence. We're also looking at a 60-minute chart, hourly candlesticks. Here's our downtrend line off the highs right there. We've had enough reactions, 1, 2, 3, 4 the other day, and we're starting to crack it, but you want to see a solid thrust up through there, and to be safe, a break over 441.23 right there. It's resistance. Next level is 445.58. And I would target at least 456 right there. That's, let's just say right now, T1. We'll call it T1, T2, maybe even R1 sometimes. Well, R1, first resistance, again, is about 441.23. First target or next resistance, 445.58, and then 456.48. Actual resistance levels. You want to, so, and then you can also, if it starts to take off, just trail up your stops and let it run if you're a trend trader or a longer term investor and you think copper has room to go. But again, nice divergent low on the 60-minute chart here, and also the case was made a minute ago on the daily chart for you. Next up, let's talk about Netflix. Netflix, I was meant to cover in the video last week, and I missed over it, and skipped over it in my notes. This is what it looks like on the daily chart. Netflix, like a lot of these big market-leading stocks, it's up there. It's not as big as Facebook and Microsoft and Tesla, but it's not far below. It's one of the largest holdings in the Nasdaq 100, within the top 10, and had that multi-month consolidation range, playing a game of ping pong back in here between top and bottom, top and bottom, top and bottom. Finally broke out, back test, and that's bullish. But it's had a pretty good run since then. Since the breakout and back test, it rallied about 20%, right? Nothing goes up forever. Things get overbought, and more importantly, they start to diverge. It shows the momentum is waning, and so there it is. You have a nice trend line. We are testing that trend line now based on this divergent high. I mean, we could certainly get another bounce, but this one is a short setup. And basically, it's going to be a break of Friday's lows should do the trick. There's a nice clean trend line. You can zoom in on a 60-minute chart and see it nice and clear. There's your trend line right there. A little whip down here at the open, or maybe that was on Friday, but we hit horizontal price support 643.71, bounced. And so if you really zoom in, basically, it's a breakdown and a back test of the trend line. So you could take a shot here, and I could tell you it'd be aggressive, but maybe a half position, and or hold off, meaning and if you do it, or wait and hold off and wait for a break of 643, round down, call it 643 even though I have it at 643.71. That'll be a break of yesterday's lows, and that'll put us solidly below the trend line. So there'll be no mistaking the breakdown. And then there's your first target, 618.29. So if you took a shot here and you want to ride that down, that's about a 5% drop from where we're at. And then again, remember, you're breaking down on a more significant daily uptrend line as well. And I'll tell you this would also be a target here, about 622 and change, 623 maybe, and quite possibly, especially if the market breaks down, gives us that sell signal, another run back down to test the top of that recent range, about 575 right there. And that would be obviously a much larger swing trade, down about a 12% drop in Netflix. Let's update Tesla. All right, so we had over the weekend one of, if not the world's biggest egomaniac, Elon Musk, tweeting out, opening a poll up to Twitter whether he should sell a $20 billion stake in Tesla to pay taxes, because the wealthy don't pay enough taxes. And he tweets out. I think he gets just his ego stroked when he can see how much he can move, not just his stock, but the market or whatever the crypto du jour he's focused on, whether it's Dogecoin or Bitcoin or who God knows what's next. Either way, the charts are the charts, and so his tweet, the Twitter respondent said, yes, you should sell your $20 billion stake. And so that obviously caused the stock to go down, but it was also a technical breakdown, and it is a sell signal, so take it on face value. That was the fundamental catalyst, but I had just covered Tesla the week before, told you we had negative divergence here and an uptrend line on the 60-minute chart and a breakdown backtest. So we actually had the sell signal, as I believe covered last week, before he even tweeted this thing out, his poll or survey on whether or not to sell, and there it is. So now what we did is, keep in mind, you might want to hold off right now. We have minor support here. I may have added this line since last week, I can't remember, but 1151.50ish right there, and that is all this recent support. It was a little support shelf here on the 60-minute chart, so that's where we gap down. The buyers are stepping in. So to make it very simple, either break below there, the next drop down below, we'll call it 1151, or if you want to be super safe, wait for a break of the lows. But I think at that point, if we take it out, there'll be a lot of stops. It'll probably be a pretty quick move down. So I'd want to get in front of it and maybe short it just before there and put a stop above. So again, hold off because a gap down on the news and people are buying that up. And there's a gap to be backfilled. Here's another objective short right here. Let me give you the line. You can short it here. I have absolutely no desire to chase this one long. I'd rather just let it go. You don't have to be long or short of stock. To me, it's a short setup based on valuation, sentiment, you name it, and most importantly, technicals. So there it is. There's objective short number one, a backfill the gap up to about 216, give or take. I would short a little below that. Don't wait for a full back test. If all eyes are watching 216, they may step in early. So, gosh, you could even take a shot here on this bounce back. They bought it up after the open. You can see that right there, the green candle. There's a gap down. Or, again, a break below 1150, and a lot of thin air below Tesla, by the way, guys. By that I mean there is a gap right here, and but you can see there's a thin zone. If it starts to break here, there's some support around this area, but I would look at probably a pullback to this. If you're swinging it down, here's a trend line right there, and that 945 level. There's a gap right there, so that would be approximately a drop of at least 20% in Tesla. Pretty aggressive call. Is it going to happen? Well, most likely only if the stock market itself, the NASDAQ 100, goes down. Very unlikely you're going to see Tesla, especially due to its weighting in the indexes, fall 20% and not see the indexes also go down, at least, go down somewhat. And then there's others in the NASDAQ 100 that are up there, have a heavy weighting right along. Like this one, Adobe's a little bigger than Netflix, and right at resistance 643 on the 60-minute chart, there's an uptrend line. So it's a common theme. I'm seeing more and more of these FANGs we're starting to put in, and the top 10 holdings, I should say, some divergent highs. There was the last time Adobe put in a divergent high back here, and the stock from that divergent high, which is right about where we're trading right now, about the same level, it fell good, 18, almost 20% right there. And so there's, and of course you don't short divergence because we had divergence right here. I always say divergence is not a sell signal. You had negative divergence here, you had it here, you had it here, you had it here. But what happened right here after the divergence? You got a sell signal breakdown. And it wasn't very impulsive at first, but you were broken down. You were below the trend line. They back tested for a little while. And then, boom, finally, after the Adobe failed to recover the trend line, sellers stepped in, you had your first reaction, and then, boom, you got a nice correction. So that's what you're looking for. In fact, set an alert. And the more and more, the reason I like to cover these market-leading stocks, the top ones, there's ASML, another one, which is even larger in market cap than Adobe. I'm going up now. There's your trend line. There's your negative divergence. There's your last divergent high. Had a breakdown, solid sell signal, rallied back, but it failed right about where the previous high was, and then boom. So now We come full circle, so almost identical pattern. We're even lower, actually, from a bigger picture. If we break down now soon below this trend line and get a sell signal, and this plays out, let's say to the tune of something comparable to this correction off this divergent high, well, guess what that's going to look like? It's going to look like this, right? You're going to come down here. These are your targets right there. You're going to probably come down to this 685 target, and then what happens? It starts to change the bigger picture, out to the daily chart. It shows you now we're in a intermediate term downtrend, not just a short term correction right there, corrective wave, because again, if we break down soon, we're going to have failed. We're going to put in a lower high, a series of lower highs there, and then of course if we take out that low, we're going to have a series of lower lows as well, which is all the makings of a downtrend. So it starts to now look, when you go out to the daily chart, you can see here, ASML, there was our primary uptrend line, and there was our big divergent high, there was our breakdown, kickback rally, boom, come on down here to 608. That's where I think this stock is going. This is a big chip maker. And if for whatever reason it breaks that, that's very ugly. This is a big old thin zone on the volume at price histogram, and that means long term this stock could fall all the way back to 400. That would be a huge correction in the stock. Again, first things first, and let me just give you that intermediate term swing target right there. Max target right now of about a 27-28% drop in ASML. And again, one of the top semis, one of the top components of the NASDAQ 100. Alright, that's it. I've already gone over enough of those. I'll go over the rest of the things in another video when I do a market update. Moving on to gold and silver. That's so far so good. Everything I like to see. At that divergent high, I won't spend a lot of time because I update this on nearly a daily basis. Divergent high, we had a little correction, and the divergence played out as it often does, but for a relatively minor correction. The buyers have come in pretty hard. Look how aggressively they've bought up gold after that divergent high. So again, this proved to be, in my opinion, a bear trap. I mean, you could have traded it short, but not for very much. Usually you get a divergent high, and that's the next big leg down in a downtrend. So far, the buyers have stepped in pretty aggressively, and most importantly, hence the reason for my update today. I told you last week I wanted to see these previous two highs taken out. They did. They took it out right now. That should, no guarantees, it should open the door up for a move to my next target, about 1838. And as I've been talking about for quite a while, quite bullish if and when we can take out 1838 with conviction. It's where the sellers have stepped in for months now, and a lot of distinct reactions. Again, a blind man can see that on a chart right there, that 1838 is a big level for gold. Silver, looking good as well. There's our primary downtrend line. That was our divergent low, the minor trend line break, then stair-stepping higher. Buy signal number one right here, buy signal number two, a more significant buy signal, more significant because it was a larger, better defined downtrend line. Breakout, so we put in a minor divergent high right there when we hit that 24,867 target, almost to the button. As often is the case, initial tag of resistance level or target from below produces a reaction. We came back 23,055, which was pointed out as an objective long entry, was very nice support, and so far, boom, it was. Now, unlike gold, you haven't taken out the recent reaction high, so that's what silver needs to do. And if gold gets on up to that target I gave you a minute ago, what was it, 1838 or whatever, that'll most likely be the case. So either way, it's still the next resistance. It's a key reaction high, not just the previous reaction high, but also, again, it was a target laid out in advance before we even had that reaction high, because we had these reactions here and here and here. All right, so that's it. And then a break, obviously a break above that. Solid break is going to be bullish. Should open the door up to the next target, 25,849. And then after that, you have 26,638. To save time, I'll skip the charts of GLD and SLV as well as the miners right now. Just remember, the miners tend to follow the metals. The only time that usually doesn't happen is in a very strong, powerful sell-off in the stock market. When things are in free fall mode, and that's certainly not even, well, we're not even in a downtrend yet. So I'll, if and when we get to that point, or it looks like it, I'll do an update there. But for now, the miners should rally with the metals. E7 euro, I like to confirm my analysis on gold and silver with what the euro is doing. So far, that bear trap, aka whipsaw, false breakdown, fake down, whatever you want to call it, right there is in play. We had numerous reactions on that 1545 support level when we broke down. Some people see what they want to see. They see the breakdown. They short that level. What I see is big divergence, and although I couldn't guarantee get the whipsaw, that's what the charts favored based on these strong divergences that we're building, especially down here on the PPO. And then boom, those divergences are played out. So as I say, fewer things in trading or investing are more bullish than a failed breakdown because of that reason. You have the it does two things. It washes out weak-handed longs that get stopped out. And then you have just a stronger core holding. Everybody holding the euro at that time. If they didn't get shaken out on that move, why are they going to sell right here? So you have a stronger set of long holders, and then you also have the shorts that jump in on the breakdown, and they start to get squeezed out. The higher you go, more and more shorts are going to get squeezed out. So same levels. You need to take out these levels, and these are potential targets on the euro. So far so good. No, again, tomorrow we do this, and we start to burn through the divergences. One false breakdown is one thing. Ideally, you don't want to see it again. It won't take out the divergences anytime soon, but again, just better if we can see the euro continue to rise from here. It should help the gold and silver trades. Okay, and Y10, that was a trade idea last week. Primary downtrend line, big bullish falling wedge, positive divergence on the down here on the indicators. And that $7 level, 697, was a big level. It was also highlighted back here before as a breakout, and the stock went up. Whatever it was, I already covered it. Something so many 100%. Put in a divergent high at the top right there, and that divergent high led to this correction. Okay, so why am I revisiting it? I threw it out there. First target was hit. We pulled back and then exceeded. I said ideally you probably want to stop around 650 or so. We went below that same day after hitting it. And so now what I wanted to say is, this is still a bullish setup. The stock is still, there's the breakout right here. It was impulsive, by the way, the breakout above the wedge, right? We came in and back tested for a while, consolidating. We had that one pop above that $7 level, but we're still above the wedge. So the breakout above the wedge is still intact. And we're still consolidating under the $7 level. And so if we can pop it again, same level, 697, $7, we'll run up, and we already hit 823. So if we can do it again, we'll probably rally on up, whether we have another reaction there or not, and hit that 10, 12 level. So again, this is a pretty aggressive one. This is a volatile stock. The others in the sector, I won't go over each and every one at this time, but some of the honorable mentions, and I did do a video about a week ago on this, and showed you some of my favorites. Some of these actually, some of the ag input stocks had more bearish looking charts, back testing, divergent highs, that kind of good stuff. But SMG was one of the more bullish ones I pointed out. Nice big divergent low right there, positive divergence, trendline breakout, consolidated among that level. Let me move that line up. I don't know, it should be right here. Why? Because that's the top of that consolidation range. So you can see broke out. This is what I covered in the video. Consolidated for a while, and then boom, when it popped it, look at that. It didn't just meander on up. It exploded off that level, and nothing but green sticks so far. In fact, I pointed it out last week as a potential bearish pennant pattern with the flagpole there, pennant, and now we're breaking out above that. So that should take SMG up here somewhere around that, probably up here, about 183.90. No lower minimum would be right here, about 175.83. So more upside there, 5 to 10% upside left. Kind of leaning towards this area here, that 184-ish level right there on SMG. The other one, or two more that I mentioned that stood out to me last week, were AVD. Nice, again, similar to YTN. You had a downtrend line, comparable downtrend line, positive divergences, which are bullish. Breakout, it didn't take off right away, had a little pop, kind of like what Y10 did last week. Pulled back, they faded the pop, but then they stepped in again and had another thrust up. And so I laid out I believe last week 1670 is my first target. That was already hit Friday. Now we've taken it out, and that opens the door up to that next target there, about $18 right there on AVD. And you also remember you're above this primary uptrend line as well, which was just tested there. So that's that one's playing out. And then I also mentioned Rkda, very speculative, probably the most speculative in the sector, aggressive, low price, but a lot of potential if it can break out. You've traded this one for many years, almost always long side pops and rips, and probably the majority of the trades that we've had on this one have been triple digit gains, 100% plus gains. And there it is. I mean, it's simple setting up. It's a trade setup, not an actionable trade. It'll be actionable when it breaks above the trend line, ideally on increased volume, 1.5 times or better average volume. And this is first target area is right up here. Let me just tell you, it's more of a target zone about 238 to 245. From where it breaks out, it really helps to clear that 213 level. So if you want to set alert or take it over 213. And then it should run up to about that 240-ish level, be about a 13%. And that's just the initial target, and you have additional targets here, and that is Rkda. Alrighty, a couple more. Do a quick update on crude oil. Nothing much to update there. We're still in a sell signal. We put in that divergent high recently, broke down there. It's been volatile, I'll give it that. But so far the breakdown's intact. And we need to take out those recent lows. That 78.90 target was already hit there. We had a bounce off it, reaction. And so next leg down should take us to 75.72 right there. And somebody requested an update on BABA. Since I did throw it out recently as a trade idea, I had it back. I don't know, can't even remember now, but I know the first target was hit. Whether it was breakout 1 here, we had a little wedge pattern, positive divergence at the lows, broke out, went on to hit the secondary trend line, breakout number 2 above this level, hit my first target, and it's pulled back, and it's back testing this trend line. And the PPO, I like where the PPO is at. It's constructive. I like this white line, the signal line. It's the last of the 2 to cross. When it crosses down below the 0 line, like it did here, it says the trend is bearish. And then the 0 line acts as resistance from below when tested, keeps the downtrend intact. However, we recently, after the breakout, we crossed back above. Now puts it in a bullish trend, at least on this PPO indicator, and so we're above that line. And so you can see if the PPO can curl up here and move on up, it would coincide with a back test of that level, and we move up to T2 and potentially T3 right there. So that's Alibaba. Obviously, you're going to want to see the Chinese stocks go up. This is FXI. I don't have a very strong opinion on it, but we do have somewhat of, not crazy about the downtrend line, but we are coming off this big divergent low right there, positive divergence, and we're actually pulled back to this 39.44 support. So this is what I favor as a move up there. Let me look at one thing on BABA. Was it BABA that I saw? Yeah, BABA has the potential too for an inverse head and shoulders bottoming pattern. That would look like this. That would be a neckline, an upward sloping neckline, left shoulder number 1, head, potential right shoulder here. So if the stock can reverse here, especially on increased volume and rally up to the neckline, that would then be a finalized inverse head and shoulders bottoming pattern, left shoulder, head, right shoulder, breakout, and the measured target would be the distance from the head to the neckline added to where it breaks out, and that'd take us up here at about that 230-ish level right there, something along those lines maybe. The other one is PGJ. It's going to look like trade like FXI. It's just another company's Chinese ETF. There it is. Downtrend line, positive divergence right there. Seems some of my lines are disappearing recently, unless I haven't updated that, but that's it. And that also has somewhat of that IHS look right there, inverse head and shoulders pattern look. So China's looking interesting. Okay, 33 minutes. I'll just take it home and wrap up and get that coal sector in here and just rifle through these real fast again because somebody asked for an update, as well as the fact I mentioned these I'll have to look back. Maybe I'll post a link to it probably over a month ago, 2 months ago. Pointed out a lot of these were getting very frothy, looking for potential sell signals. They were in an uptrend at the time and still are, most of them. and most were setting up for short trades. Some of those have already played out or started to play out, and there was at least one in there that was actually I liked. It was bullish, so I'll go over those real quick. So here's ARLP. Alliance Resources, and put in potential divergence. I could see this one going up more, or does have divergence, but it's not confirmed. I'd like to see one more thrust up, extend the divergence, and then swing it back down at least to a move for this uptrend line. Now, if and when that uptrend line goes, that's even more bearish. So I don't see this as actionable right now. You'd be taking a pot shot, in my opinion, if you went short, and I certainly don't have any desire to chase it long at this point. Same thing with Arch, ARCH, Arch Resources. I could see a little more upside here to put in another, some nice divergence like that, and then swing it back down to the trend line, at which point then it would also be, set up for a breakdown below the trend line for an even bigger swing short. HCC, this one's already played out. Here's an example. That's what I like to see. See the divergence? I like to see these clean, distinct peaks. You get the trough between them, and that's the kind of divergence I like to see. And I can't remember, maybe that's where it was when I did the last video. And look, there's where that divergence is played out, and this thing has dropped about 20% in just the last few weeks there. And there was the last time we had a divergent high there, and the stock fell a lot more than 20%. Coming up to uptrend line support, would I short it here? Absolutely not. If anything, I'd go long for a bounce trade off this trend line here with a stop somewhat below. And there's the next support, 21.28. BTU, there's another one here. So again, so I did that video. A lot of these stocks back then had divergence. BTU, again, I'll have to reference the video. I can't remember where it was, if it had already broken down or was a setup then, but there was your breakdown, back test, went up, tested the high, so you put in a double top high right here, and that double top high was also a divergent high. Actually, the divergence is steeper than it was back when I covered it on that second high right there. Bigger divergence, and then boom, this one so far, if you shorted that second test of that previous reaction high, you made about 44% on your money, and it's not over. This one, my target, first target then, and now is still 954. Nothing goes down forever. Maybe a kickback rally. We're right at that previous reaction low, so you could, again, I don't, it's in no man's land. It's between, there's already dropped 44%. The kickback rally could be more than that. I do think we're going here. And so the point is, a lot of these have already broken down, and the divergences on a lot of those that I mentioned a couple months back has started to play out. And so this sector looks toppy to me. And I think crude, as I've said, I think there's more downside on crude, and this will most likely go down with crude. AMR, this one has not yet triggered a sell signal. There's your divergence right there. Nice clean negative divergence, clean trend line. In which to trigger a short objective short entry. I'll have to sharpen my pencil on these targets. These are old levels. I was bullish back here, if you remember, on laying these and all these other coal stocks out as long trade ideas. They played out and then some. So I'm going to just drag some of these old levels here. That was a resistance level to trigger a long back then. I'm going to move that line up. I'll have to study this chart, guys, to give you targets on this one, but I think somewhere around there would be a first swing target if and when this trend line goes, about $36. CEIX, here's this beautiful chart here. Look at that negative divergence. Almost certainly played out since I covered the last update. So what I see in there, so you have big divergence, right? You have a beautiful bearish engulfing candlestick. I love to see these after an extended uptrend. That candle right there engulfed about 2 weeks worth of previous candles. It doesn't get any better than that. So that is a sell signal right there. I often talk about trend line breaks as sell signals, but you can also have a horizontal price level break as an objective short entry, or candlestick. That's a bearish candlestick pattern. And then you had 2 confirming red follow-through candles after the bearish engulfing to help say, okay, this we can add to the short, looks good. Set your stop, somewhere around the top of that candle, no more than above the candle, because then it's negated. And boom, look at that. So from that bearish engulfing, let's just say you waited and shorted the bearish engulfing after, at the close of that day when you saw it was a bearish engulfing, you made 30% on that one so far. Oh, and then it gets even better. A little bear flag going on right now. You have this impulsive drop here. Once the trend line was taken out, that was sell signal number one. Second sell signal was a break of the trend line. Went down for a few days. People realized, ruh-roh, the long side trader started getting hit. You had an impulsive drop. And the nature of a bear flag or bear pennant is a level of consolidation on decreasing volume after the impulsive move down, which is called the flagpole. Here's your flagpole. You take that, add it. The flagpole is the distance of the impulsive drop. Add that to the highest point of the flag before it breaks down. Now, it hasn't broken down. Let me be clear. Your next objective short entry is going to be on an impulsive break or breakdown below the flag, and then that's your measured target right there, which comes in around 1885, although I have support down here, and that's where I think this thing is going down to about 16 and change right there. METC, breakdown today. Look at that. Nice clean trend line, negative divergence on it, and boom, sell signal, impulsive breakdown. So there's an objective short, actionable right now. Target's going to be this trend line right here. At least I'll have to, let me give you another one. Let me borrow some of these old lines from when I was bullish on it. Resistance levels on the way up. There's your first target, 965, and or the trend line. They come in around together depending on if and when it gets there. And you're looking at this one at least, if it hits the 965 level, a drop of at least 30% right there, and it'll probably shoot through there, kiss that trend line. That's about 35%. So there's your trade idea. That's about it. I can go over each and every one. There's not too many more. SCX, negative divergence. There was your sell signal, broke down, kicks back. It's been just back tested actually the other day, and you have a minor parallel trend line there below it in which to trigger the next sell signal when that breaks, and that should take us down to 560 right there. NRP, primary trend line here is a target. You have a minor trend line here. You don't have, you have some divergence. No, you don't have divergence, not yet. So if it has another thrust up, you will. But a lot of these calls are breaking down, so you may not get divergent highs on all of them. This one will trigger a sell signal and a break of the minor trend line. And again, target would be this primary uptrend line right here. NC, there's a trend line that it probably is going to come back and check and visit. Not my favorite right now. AREC, this one was bullish. I had a bullish setup that I believe was laid out back then. Positive divergence, breakout, hit the 257 resistance / targets, been consolidating under there. Remember, birds of a feather flock together. So in a vacuum, I'd say, yeah, this is a bullish setup. Go long, and you can, and it might work. A break of 257, call it 260 to be safe, for the run up to 407. Maybe it's got something else going on fundamentally, but yeah, it's a strong chart. And if not, because the sector's in a downtrend, maybe this is all you get out of that bullish falling wedge breakout, and that's going to come on down here to 119. That's support. HRNG, primary trend line, negative divergence, breakdown, powerful sell signal, snapback rally to come in and back test perfectly. The trend line pulled back. There's a lot going on here, but then there's a larger trend line here. It's also back testing. Not one of my favorites. Let me just say that, because you have this trend line here. If you could have shorted that, would have been a beautiful short up there, about 476 in the back test of the trend line. So I think it'll continue on down, is where my guess is, down here at about 178. CCNC, again, this was one of the bullish setups, I believe, from that last video. Positive divergence, and the breakout right here above the trend line. Right there's your breakout. Actually gapped up, back tested there on the back test. It rallied about 39, 38, almost, yeah, about 40%, close to it after the breakout. And that's it. And there's the sector as a whole, coal sector, and there's that divergent high. See, so I think the I already can see the majority of companies have already broken down and started to correct. There's a few that were bullish that I showed you, but you got to be careful, because if this sector gets some more downside momentum, moves down here, hits the trend line, and then ultimately breaks that trend line, it's probably going considerably lower. So be careful with the coal stocks. All right, guys, that's a lot of trade ideas. And not everything. I'll continue to review the charts today. If anything else stands out, I'll get another post out to you guys. This has been Randy Finney with Right Side of the Chart. Have a great day.